You found it. The perfect deal. The one that makes your heart race. It's a diamond in the rough. A little beat up, sure. But the numbers work. The profit is there. You can see it. Crystal clear. There's just one problem. The seller wants to close in 10 days. 10 days? Your banker just laughed when you told him. He's still shuffling papers from a deal you tried to do 6 months ago. The clock is ticking, loudly. Every second that passes, you feel the opportunity slipping through your fingers, about to be snatched up by someone else, someone faster, someone with cash ready to go. This is the moment of truth for every real estate investor. It's the wall you hit when ambition meets reality. Traditional financing is slow, painfully slow. Banks move at a glacial pace. They want months of paperwork. They want perfect credit scores. They want picture-perfect properties, not ones that need a total gut job. They are built for safety, not speed. Designed for the long, slow marathon, not the high-stakes sprint of opportunistic investing. So what do? Walk away? Give up on the dream? No, you don't. You find a different way, a smarter way, a faster way. You need financing built for the speed of the deal, not the speed of the bank. You need access to capital that understands your game. Money that sees your vision for a distressed property. Money that isn't afraid of a little dirt, a few broken windows, or a 70s kitchen. This is where pros separate from amateurs. They have a secret weapon. Cash in hand. Close the deal. Get to work while others wait. That weapon is a hard money loan. Sounds intense? Maybe intimidating, but it's not. One of the most powerful tools in your real estate arsenal. The key that unlocks slammed doors. The financial equivalent of a sports car when everyone else is driving a minivan. From finding the deal to owning the deal in record time. So what is this hard money I'm talking about? Let's break it down. Super simple. A hard money loan is a short-term loan from a private individual, a specialized lending company, not a big faceless bank. These are real people, real investors, just like you. They get it. They are not lending you money based on your beautiful credit score, your last 2 years of tax returns. They are lending you money based on the hard asset, the property itself, the bricks, the wood, the land. That's what they care about most. Think of it this way. A bank focuses on your credit report while a hard money lender focuses on a house's value. A bank looks at you and asks, "Are you a safe bet?" They dive deep into your financial history, your job, your income, every late payment you ever had. It's a personal interview. A hard money lender looks at the property and asks, "Is this deal a safe bet?" They focus on the value of the house, the building, specifically what it will be worth after you fix it up. This is a game changer. It means your past financial hiccups don't automatically disqualify you. The deal's potential is what truly matters. It's pure, unadulterated business. Because the property is the collateral, the risk for the lender is lower in some ways. If the deal goes south and you can't pay back the loan, the lender doesn't chase you for years. They simply take control of the asset, the property you bought. Who exactly is using these loans? Is it some shadowy group of investors in a back room? Not at all. The people using hard money are the ones you see making moves. They are the action takers. Building wealth through real estate, one project at a time. The most classic user is the fix and flipper. Pros who buy the ugliest house on the best street. They see past the peeling paint and shag carpet. They need to buy the property fast, get their renovation crew in yesterday, get it back on the market before the season changes. A bank loan would take so long the deal would be dead on arrival. Then you have the BRRRR investors. Buy, rehab, rent, refinance, repeat. A hard money loan is perfect for the first 2 steps. Use it to buy the distressed property and fund the rehab. Once it's fixed up and beautiful, place a tenant in it. Now it's generating income. With a tenant and renovated property, go to a traditional bank. Ask to refinance. The bank sees a stabilized cash-flowing asset and gives a long-term, low-interest mortgage. Use that mortgage to pay off the hard money lender and often pull extra cash out. Then repeat the process. Property developers also play in this space. Hard money acts as a bridge. It gets them control so they can set up the bigger play. It's about securing the asset first. Knowing what a tool is and knowing when to use it are two different things. You wouldn't use a sledgehammer to hang a picture frame, right? Same thing here. Hard money is a powerful tool, but it has to be used in the right situations. The number one scenario is when you're facing a tight deadline. The seller needs to close in 2 weeks. A wholesaler has a contract you need to take over immediately. An opportunity pops up that will be gone by the end of the week. In these cases, speed is your most valuable asset. The higher cost of a hard money loan is simply the price you pay for speed to secure a profitable deal you would otherwise lose. Another perfect time to use hard money is when the property itself is unbankable. Damaged roof, cracked foundation, missing plumbing, no working kitchen. Traditional lenders have strict property condition requirements. A hard money lender, on the other hand, sees potential. They are lending on the after-repair value, and they understand that you are going to fix these problems. The problems are why you're getting such a good price on the house in the first place. Hard money embraces the mess because it understands the vision. Hard money also makes sense when your personal financial picture isn't perfect for a bank. Maybe you're a self-employed entrepreneur with fluctuating income. Maybe you have a ton of assets, but your cash is tied up. Or maybe your credit took a temporary hit. A bank's rigid underwriting box might exclude you, but a hard money lender is more flexible. Solid down payment. A clear plan for the property. The deal itself is strong. They are betting on the deal, not your W-2. Finally, hard money is a strategic choice when you have a clear and short-term exit strategy. This is critical. You are not planning to keep this loan for 30 years. You are using it for a specific, limited time. Sell the property for a profit, a flip. Refinance into a conventional mortgage, the BRRRR method. The hard money loan is the short, expensive bridge to get you to your final destination, a profitable sale or a long-term, low-cost loan. If your plan stretches beyond 1 or 2 years, you need to look at other options. But for that quick strike, it's unbeatable. All right, let's get into the mechanics. How does this all come together? The process is refreshingly straightforward compared to a bank. First, let's talk about the numbers. The interest rates are higher. While a bank might offer single-digit mortgages, hard money rates are typically 10 to 15%, sometimes more. You'll also pay origination points, usually 1 to 4 points. Example, $200,000 with 2 points, $4,000 fee. You pay a premium for speed and convenience. These loans aren't 30-year mortgages. They're short-term, 6 to 24 months. Goal? Get in. Get the work done. Get out. Payments are often interest only. That means monthly interest only. No principal paydown. Principal is due at term end in a balloon payment. Approval is where hard money shines. It's built for speed. Banks may take 45 to 60 days. Hard money, term sheet in 24 hours. Funding in 7 to 14 days. Some can even close faster. Why? They cut out bureaucracy. Paperwork is minimal. They want purchase agreement, scope of work for the rehab, your budget, an appraisal based on the after-repair value. Focus is on the asset, less digging into your personal life, more confirming the deal makes sense. Trade-offs, cost and risk. If renovation runs long, or the market shifts and you can't sell or refinance, you could be in trouble when the loan comes due. The lender can take the property. Be confident in your plan, your timeline, and your numbers before you sign on the dotted line. To use hard money effectively, you need to speak the language and understand the structure. It's not complicated, but you have to know the key components. The first is the down payment, often discussed in terms of loan-to-value or loan-to-cost. A lender won't give you 100% of the money. You need to have some skin in the game. They might lend you 75% of the purchase price, meaning you need to bring a 25% down payment. Or, more commonly, they will lend based on the after-repair value. For example, a lender might offer to lend up to 70% of the ARV. Let's walk through that. The ARV is the most important number in the deal. This is the estimated value of the property after you have completed all the renovations. The lender will hire an appraiser who specializes in this to determine the ARV. Let's say you find a house for $200,000 that needs $50,000 in work. You and the appraiser determine the ARV will be $350,000. If the lender offers 70% of ARV, that's $245,000. Since the purchase price and rehab total $250,000, the lender is willing to fund almost the entire project. You would only need to bring $5,000 plus closing costs to the table. This is how you can leverage other people's money to do big things. The renovation money itself, often called a rehab budget or construction escrow, is rarely given to you all at once. Lenders want to see progress before they release more funds. This is managed through a draw schedule. You might complete the demolition and framing, then submit a draw request with proof of the work. The lender sends an inspector to verify, and then they release the funds for that portion of the project. You use that money to pay your contractors and move on to the next phase, like plumbing and electrical. This protects the lender by ensuring their money is actually going into improving the asset and increasing its value. Most importantly, you must have a bulletproof exit strategy. This is the first question a lender will ask. How are you going to pay me back? You need a clear answer. Plan A is typically to sell the property, the flip. You should have a detailed analysis of comparable sales in the area to prove your projected sale price is realistic. Plan B is to refinance into a long-term conventional loan, the BRRRR. So, let's land this plane. Hard money is not a magic wand. It's a specialized tool for savvy investors. It's not for everyone. If you're a first-time homebuyer looking for a place to live for the next 30 years, this is not for you. Stick with a traditional mortgage. If you have no cash reserves, wait. Down payment, closing costs, unexpected repairs. Hard money requires you to have capital. No concrete plan. Plus, no exit strategy. Sees gambling, not investing. If you don't know how you're getting out, don't get in. It's that simple. For the right person with the right deal, hard money is rocket fuel. Compete with all cash buyers. Say yes to opportunities others pass up. Build a portfolio fast. Generate wealth quicker than traditional financing. Think pros and cons. Pro, incredible speed. Pro, flexibility on property condition. Pro, ability to get deals done. Con, higher costs. Con, short-term deadline risk. Make sure pros outweigh cons for your project. Become obsessed with your numbers. Know your purchase price. Know your rehab budget. Add a 15% contingency for surprises. Know your holding costs. Loan payments, taxes, insurance, utilities. Know your ARV inside and out. Do your own research. Don't just trust someone else's number. If profit margins are paper thin, hard money costs will eat them. You need deals with meat on the bone to cover costs and still profit. Success beats you solving problems. Problem 1, find a great deal. Problem 2, finance it. Hard money solves the financing problem so you can focus on transforming properties. It's a ticket to the big leagues, but it demands preparation, planning, and precision. Do your homework. Build a cushion. Work with reputable lenders. With strategy and respect for risk, hard money can unlock your potential as an investor. Now go find that deal.